Hello, good morning, ladies and gentlemen. So pleased to welcome you to another promising session as we, as usual, going to be taking advantage, looking at the current market structure to take advantage of potential trading opportunities ahead of the New York and London session today. It was quite a volatile trading day that was yesterday, following the CPI data, which came in um, just as expected, actually. And this, let's look at the economic calendar to see things together here. So we were looking out for, hold on a second, let's run through this quickly. So so yesterday we were looking forward to a 5.5% year-on-year basis figure, which came in just as expected. And we saw how the market actually did a very huge immediate bullish traction in that regard across most of the pairs that we have been monitoring. And unfortunately, yesterday, I wasn't able to do a follow-up detail after the CPI yesterday, as I had family issues that I needed to sort out within that time frame, and I never knew it would take me that long. So I wasn't able to follow up with you guys yesterday on both my TradingView and Telegram platform. But for those who took advantage of some trading opportunities there yesterday, well done to you guys for being on standby to have taken advantage of some trading opportunities during and after the event. With that being said here, let's look at what is happening in the market, what has the market has been doing so far in the last 24 hours, and let's see how we are going to be taking advantage of a trading opportunity today as the market is gradually going into normalcy after the volatile movement yesterday. And today we have a handful of high impact macroeconomic events coming in, especially from the United Kingdom's docket. And today the Bank of England is widely expected to raise its policy rate by 25 basis points, that is to 4.5% from the previous 4.25% following its May policy meeting. And as a result of this situation here, hold on a second. Sorry, hold on a second, please. Give me a moment. I'm sorry for that breaking transmission. Okay, so we are looking forward to a whole lot of a handful of high impact event coming in from the UK economic docket today, which is one of the events that majority are looking forward to for this week. So here we are on the economic calendar, and the first event is coming in about 3 hours from now, and that is the Bank of England minutes. And all this is going to be running simultaneously. So we have the Bank of England monetary policy report, we have the asset purchase facility, the interest rate decision, which is the center of focus for today. We have the MPC vote rate cut, MPC vote rate hike, and MPC vote rate unchanged, after which there will be the monetary policy summary. And to cap it up, after 30 minutes after this event is the Bank of England governor's speech to give us an idea of why the monetary policy situation of the UK economy is. So these are very high impact events that we are going to be looking forward to. So I would advise that we be on standby so that we can catch this opportunity for today. So with that being said here, let's dive right into the chart. Let's look at things from a technical standpoint, so that we can position ourselves in such a way that we can catch any potential opportunity prior to these events, during the events, or even after the event. So join me, let's dive right into the chart. And if you are with me here, let's give me a comment so regarding the quality of the sound, the visual quality and the like. So let me know if we are on the same page here. All right. Okay, I can see Leon. How are you doing, Leon? Good morning to you. It's been a while since I saw you. I didn't see you throughout this week. Trust you are doing well, Leon. All right. So thank you very much for that feedback. So with that being said here, let's dive right into the chart. And as usual, the first commodity we are going to be looking at this morning is the US oil spot. And on the US oil spot, if you look at the old structure here since the beginning of this week, you would agree with me that price action has been quite choppy, as we have a situation here where price action has been ranging since Monday actually between the $73.50 level and the $72 area, to emphasize the level of indecision in this market. And I think I made mention of how important this current structure we are in. I deliberated on this on Monday, Tuesday and Wednesday on how important this structure is. And for us to see the importance of this zone that we are right now, we will need to scale up into a much more higher time frame where I showed you how important that level is and how we are going to be anticipating potential trading opportunity around that area. Now, when we scaled up into the 4 hours time frame, after considering the activity of price action since the beginning of the month of April, this was what we were able to find. And from an holistic point of view, it is quite obvious that price action is bearish in this market. And to further emphasize the strength of the sellers in this market, we can see that price action had consistently found lower heights and lower lows in this market to give us this simple technical structure in the form of a descending channel. And you all know what happens in a descending channel like this. We want to see price action come back into the resistance line to incite price action to the downside. And if price action comes into the support line, we want to see price resume a retracement to the upside. However, something interesting happened along the structure during the course of this week actually. So since the beginning of the week, we saw this whole situation. Remember, we had a buy position at the beginning of the week, which gave us about 120 pips thereabout before we saw the bearish move to the downside. And one important thing that we took note of at the beginning of the week was the fact that price action started to range just exactly around the resistance line of that descending channel. And with this kind of situation here, there are two things that we want to be taking into consideration. And if we are judging this from a technical standpoint, it is either sellers resume right below the resistance line, that is selling pressure resumes, that buyers found it difficult to break out of the resistance line to incite a bearish move to the downside. So that is one scenario we were looking forward to at the beginning of the week. Then the other possible scenario that could happen at this juncture is a breakout of the resistance line to incite a signal that buyers are likely going to be taking over this market. That is one. And secondly, it would have been a sign that the trend line may no longer have the capacity to continue to negate the bullish momentum in this market. And what we saw here on Tuesday was quite interesting, as we saw a bullish engulfing candle breaking out of the resistance line. And since then, price action is yet to come back below the resistance line. So it is a sign that buyers are gradually gaining momentum. And from a technical standpoint, whenever price action breaks out of a resistance line like this, the next thing we want to be looking out for is price action coming back to retest the structure. And this was deliberated on yesterday. I told us yesterday here that we are going to be using that trend line, that is the resistance line of that descending channel, coupled with the $72 area, which is here, to guide our trading activity for yesterday. So if price action comes back to retest that structure, we are going to be looking out for buying opportunity. And if you look at what has been happening here in the last 24 hours, it is quite interesting that we have been seeing some buy pressure resume just exactly where the $72 area and the resistant line of that descending channel is sharing a confluence, as you can see here. And at this point in time, it is quite reasonable that we want to be looking out for buying opportunity from this current structure. So how do we intend to take advantage of a buy opportunity for today? And for those who are already in a buy position here, how are we going to be managing our current position? So in that regard, for us to get a better perspective into what is going on here, we will need to scale down to a much more lower time frame, like the 1 hour time frame, where we have been monitoring price action since the beginning of the week. So with the information we have here, I just wanted to show you how important this structure is, so that whenever I'm discussing this on a much more lower time frame, you will be able to understand and be on the same page with me. So going back down into the 1 hour time frame, this is what we have been noticing since the beginning of the week, and in fact since the breakout of that resistant line. So here we are on the 1 hour time frame, and this is the resistant line of that descending channel that was broken out of on Tuesday. And since then, we have been seeing the situation here where price action had been coming to retest that structure, continued buy pressure above this level, which actually helped us to get be part of a bullish momentum from that area. And I shared an update this morning that for those who are already in the buy position, that we want to be moving our stop loss accordingly to lock in some profit. So at this point in time, move your stop loss to your entry point, and let's see how price action is going to be playing out from this current structure. So we are looking forward to more buying opportunity as long as price action remains above both the resistant line and the $72 area. Now, with the information we have here, with your stop loss moved accordingly to secure this current position, what is going to be our plans for today if we are going to be buying or adding more position to our existing trade? So right now we have a situation here where price action has actually broken out of the $72 area. We saw a couple of retests of structure, as you can see here. But one thing for sure at this juncture is that in the last 4 hours, we have been seeing how price action has been rejecting the $73.250 level, giving us signs that sellers are likely trying to push price to the downside from this current structure. The previous high is sitting around this area at the $73.50 level, as you can see here, and price is yet to break that previous high. So at this point, we need to be very, very careful, as price action is still choppy at this point in time. And one thing I'll just say here is move your stop loss accordingly, and let's wait for price action to break out of the $73.50 level, retest of structure to incite another wave of bullish momentum to the upside. So that is the only way we are going to be looking out for more opportunities in this market to buy the US oil spot for today. But be rest assured that I will be with you in the comment section if I find something interesting on a much more lower time frame, like the 50 minutes time frame, to spot an opportunity to trade. I will let you know in the comment section of both my TradingView and Telegram platform. Now, in as much as we are looking out for buying opportunity in this market, we cannot ignore the potentials of sellers too as well. And like I said earlier, that price action has been ranging since the beginning of the week, just between the $73.50 level and the $72 area, to further emphasize the level of indecision in this market. And you all know that whenever we have this kind of simple flat channel, we want to see price action either break out of the resistance line for buying opportunities or break down of the support line for selling opportunities. So at this point in time, the only way I will be thinking of selling the US oil spots for today is for price action to take out the support line at the $72 area. So if I'm going to give you a visual representation of what I'm talking about here, I want to see price action break down the $72 area, that is the support line there. Then remember, we are not getting too excited as we still need some confirmation to happen, giving us a whole lot of confidence that sellers are gradually gaining their momentum. So I want to see a breakdown of structure, retest at one point, and most importantly, we shall be looking out for reversal pattern, giving us signs that buyers are finding it difficult to find new high. Then at that point, we want to be part of a bearish move to the downside. I will be with you in the comment section as usual, so when it's time, I would let you know how we are going to be trading this. And if a breakdown of that structure happen, our price action would also have come back below the around the territory of the sellers, which is right below the resistant line of that descending channel identified on the 4 hours time frame. So these are my views here on the US oil spot for today. If you do have any questions, let me know right in the comment section. So with that being said, here I will be moving on to the next instrument, which is the GBP USD. So on the GBP USD, since the beginning of the week, it is obvious that price action has been quite choppy in this market, which we talked about in detail during our live session yesterday. As you can see, we had this whole situation between the 1.26550 area and the 1.26080 level, giving us a clear level of indecision in this market. And during the course of yesterday's trading session, during the New York session yesterday, especially around the time we had the CPI event, we saw some volatility in the market, which unfortunately I was not part of this move actually, as price action moved about 70 pips, and immediately we saw the bearish momentum bring crashing price down back into within the support line of that channel. And for me, with this kind of situation, it just gives me a sign that buyers are finding it very difficult to take over this market, and this could be as a result of the interest rate decision coming in from the UK dockets today, and this has reflected on the chart as a very choppy situation, as participants are looking forward to data that will give them an insight into what we can be looking out for this week. However, remember what I said here yesterday, that if price action, since we already have a flat channel, just one right here between the 1.26550 level and the 1.26080 area, which is a flat channel obviously, and we made mention and we agreed yesterday that we are going to be having a buy stop and sell stop at both ends. So with a sell stop sitting below the 1.26080 area, I do hope you had your sell position triggered at that point. Personally, I missed this move, but one thing that happened this morning was a sign here that price action was actually going to the downside. And remember vividly yesterday, we acknowledged this bullish trend line after connecting the series of higher lows in this market, which we said it's going to be our guide for trading activity for yesterday's trading session. And one thing we said here is that if price action remains above that trend line, we feel comfortable in our buy positions while we look out for more opportunities to add more position to our existing trade. However, if price action drops below the trend line, then at that point we want to be seeing this as a momentum shift. A retest of structure will further give us a confirmation that sellers are gradually gaining momentum. And if you look at what happened here yesterday evening, we saw price come back, retest structure. A couple of times we had the retest of the 1.26250 level to inside that move to the downside. And for those who are taking advantage of that opportunity right there, well done to you for being on standby to have caught that move. But for those who are not taking advantage of this move, just like me, well, we want to remain patient at this juncture in the market to look out for more opportunities to be part of this move to the downside. Then one thing I would like us to look at here, considering the fact that price action has finally broken down the support line that has been holding this bullish momentum since the beginning of the week, it is a clear signal that sellers might likely be taking the day for this week. And with the breakdown of the 1.26080 area during the early hours of today, from a technical standpoint, whenever price action breaks down of a key structure like this, we expect that one point in time, price is likely going to come back, retest that structure to incite another wave of bearish momentum to the downside. So at this point in time, why not wait for a retest of structure to happen? If market is going to be giving us that second chance, then at that point we can be thinking of joining around that area. So for those who had missed out on this bearish momentum that we have here, I still think we have another opportunity to be part of this move if price action comes back to retest that demand zone that was broken during the early hours of today. So that is one scenario we are looking out for selling opportunities in this market. And the other scenario that could also happen here, just in case price does not come back into the structure and instead it goes into a consolidation phase just right within the 1.258 and the 1.257. If it continues like this, there is a high chance that this could transition into a trend continuation pattern. It could be a bearish rectangular pattern, flag pattern, rising wedge, whichever case it may be. Breakdown retest on our lower time frame will then definitely incite another wave of bearish momentum to the downside. So these are the things we are going to be looking out for on the GBP USD for today. So our bias for today remains very bearish, since we already had the breakdown of that demand zone. Now let us find a structure here that we are going to be using to guide our trading activity for today, that will make us feel comfortable in whatever position we are in. So in that regard, we are going to be bringing out our line chart, and then we want to connect the series of lower highs here. And from this point in time, I think our trend line has been changed based on the new structure we have in the market right now. So we have this trend line now figured out. And for the bullish trend line here, I want to reapply my bullish trend line to capture the higher lows since yesterday. So we have this one right here. Let me give it, I think, hold on a second. Okay, so here we go. So we have new trend lines now. So the first one is that bearish trend line after connecting the series of lower highs in this market, though we had a sharp breakout of that structure yesterday during the CPI event, which happens to later become a false breakout at that point. And since price action dropped back below the trend line, we have seen a situation here where price action had continued to respect that trend line to the downside, further giving us an insight into the strength of the sellers in this market. So as long as price action remains below this trend line, we shall feel comfortable in our sell position, and in fact look out for more opportunities to add more position to our existing trade. And if you look at the bullish trend line here, which has been holding the bullish momentum since Tuesday of this week, we can see now that the trend line was broken during this morning. In fact, we saw the breakdown retest of that trend line, which is a very strong signal that we are going bearish in this market. So well done to those who are taking advantage of that move right there. And for those who had missed out, we are going to remain patient at this point, waiting for price action to give us a confirmation to join. And if you are with me on my Trading View and Telegram platform, we shall be getting an update in due time when we start seeing something significant that we can use to position ourselves ahead of the interest rate decision event coming up today. So that is my view here on the GBP USD. If you do have any questions, feel free to let me know right in the comment section. So with that being said, here I will be moving on to the next pair, which is the XAU USD, which is one of the pairs I shared this morning actually. And yesterday during the CPI event yesterday, we saw some volatility in the market. And remember, yesterday we said that as long as price action remains above that bullish trend line, we'll feel comfortable in our buy position. I also mentioned how important it is that we have a very wide stop loss around that area to capture that old zone between the $2,029.50 level and the 2025 area, which dovetails to about 40-50 pips thereabout in that regard. And if you look at what happened here, quite interestingly, we saw price action continue to respect the trend line, and in fact it was also respected during the CPI data yesterday, as we saw that engulfing bullish candle springing out of that structure to give about, how many pips was that, of close to 200 pips on that one. And for those who took advantage of that opportunity, well done to you for being on standby. Personally, when I came back from my day activity yesterday, I saw our price action as hit that TP target with about, how many pips was that, 160 pips around that area. So it was quite an interesting situation yesterday on the XAU USD. Now during the during my morning routine, when I monitor the price action every morning like this, I saw this whole situation where the potential of sellers is very, very likely at this particular point in time. And remember, we have been taking into consideration the impulsive move that we saw on Friday of last week following the NFP data, which came in beyond expectation positively, and we saw that crash into the $2,000 mark. And I told us all yesterday that since the beginning of the week actually, that the bullish momentum we have been noticing here could likely turn out to be a retracement of that impulsive move that crashed into that $2,000 area to incite another wave of bearish momentum. If you remember vividly, that was what I made mention of. And yesterday live session, we saw how price action has been finding a whole lot of rejection at the $2,035 area, giving us a clue into the heavy presence of sellers around that area. So every attempt by the buyers to break out of that structure has been met with strong resistance from the sellers, and this is a sign that we might not likely see a bullish momentum anytime soon around this area, and this could lead into a bearish move. Probably price action has culminated that retracement phase to incite another wave to the downside. But we saw the breakout of the structure here, which was one in a moment there. That is, it turned out to be a false breakout, as we saw price immediately drop back into that structure to start inciting a bearish momentum to the downside. And if we go as far as considering the activity of price action since last week, I think since the beginning of this month, you will see that we have a trend line after connecting the series of lower highs in this market to further emphasize the level of seller strength in this market. And look at what has been happening around this area since the beginning of the week. Price action had continually retested that structure to emphasize that the trend line is still very strong, to negate all bullish attempts at that point. So because of the situation here, I shared on my public platform this morning that we want to be looking out for selling opportunities. So this was what I saw here during our my commentary this morning on the XAU USD. So we said, this is what I saw here. I said the market returns to normalcy following the volatile trading activities following the CPI data yesterday. The price is back within the range where the week started. The bearish trend line remains our trading guide for today. And since the trend line remains our trading guide for today, definitely we want to be looking out for selling opportunities. And if you look at this whole structure here, price action broke down the $2,029.50 level, and for those who took advantage of this opportunity right around that area, well done to you for being on standby to have caught that move. And from the current situation we have right here, the market structure we are seeing on the screen right now has a tendency of giving us multiple entries. As remember, I made mention of this yesterday, that we have key structures like the 2025, 2020, and the $2,015 area, where a breakdown retest of the structures will be giving us more opportunities to add more position to our existing trade. So this is what we are going to be looking out for today on the XAUUSD. So I still hold on to a bearish bias at this particular point. So as long as price action remains below the trend line, we feel comfortable in our sell position and look out for more opportunities to sell. Now, there is one thing I would like to make mention here before I close on the XAUUSD, and that is the $2,025 area, a very strong psychological level since the beginning of this week, which has been serving as a very strong demand zone around this area. Now, at this point in time, we need to be very, very careful. So if you do have a sell position running right now, what you want to be doing is to move your stop loss, secure the current sell position, as we never can tell what is going to be happening around this area. Now, if a breakdown retest of this level happens today, I'm of the opinion that price action will be going massively to the downside. So we want to be on standby to be part of that move. So joining the $2,025 area, we want to see a breakdown retest of structure. We want to see signs on our lower time frame that confirms that buyers are finding it difficult to climb back above that structure. Then we could join that decline to the downside. And if that happens, I'm of the opinion that the move is going to be very massive. So let's be on standby to catch that move at that point. Now, in as much as we're looking out for selling opportunities, we all know what we do here. We always try to take into consideration the potentials of the buyers too as well. We don't want to be rigid. The market environment is a very fluid structure, so we want to be as fluid as possible so that we can take advantage of opportunities as well. Now, if the $2,025 area, which I made mention of earlier, turns out to still hold for bullish momentum today, then we might likely be seeing a bullish move in this market. So if price action continues around this way, in such a way that price action starts rejecting that level, something like this, multiple rejection or a double bottom structure around that level, then what we want to be doing is to identify the neckline of that reversal pattern, which will definitely be serving as a platform upon which we want to be confirming the potency of that reversal pattern. So a breakout retest of that neckline will definitely give us an opportunity to buy. Then if price action further breaks out of that trend line, then at this point we want to see this as a very strong signal that the trend line may no longer have the capacity to continue to negate bullish momentum in this market. So this is how I'm going to be looking out for buying opportunity around this area. So for those who have a sell position running right now, kindly move your stop loss, secure the current sell position, and let's see how price action reacts to that $2,025 area to decide what our next line of action will be. Be rest assured that I will be with you in the comment section on both my TradingView platform and Telegram platform to give you updates as at when due. So if you have any questions regarding what I just explained so far, feel free to drop your enquiries in the comment section. So moving on right now, we shall be going into the last instrument for today, which is the USD JPY. And remember, yesterday we had this old chopper situation, so we are going to be looking at that in a moment. Give me a moment, please. So what we are trying to say here is this: how did the week started for us on the USD JPY? So let's look at this critically. So the week started with a situation where price was caught within a channel which lasted about 48 60 hours in this market. As you can see, we saw this whole situation where price was trapped within a range just between the 135.300 and the 135.850 level. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistance line for buying opportunity or breakdown of the support line for selling opportunities. And in fact, during the live session yesterday, we actually confirmed that we had a buy position triggered prior to the live session yesterday, where we saw price action moved about, let's see how many pips was that. It moved about 20 pips thereabout, and I told us all yesterday that we shall be moving our stop losses accordingly to secure this position by moving it to our entry point. And at that point, I made mention here the next move we want to be seeing is to see a breakout of the 135.460 area to be part of a trend continuation to the upside, which never happened actually. And during the CPI data yesterday, we saw this huge bearish engulfing candle breaking through our support line. And remember, we had a situation here where we said if price action breaks down the 135.850, we want to be part of a sell move. And if you are taking advantage of that opportunity, price action actually moved about 100 pips in our favor before this whole consolidation phase and reversal setup we see here began. And one thing about this reversal setup, it shares a confluence exactly with that bullish trend line we identified on the 4 hours time frame. And for those who are not part of our live session prior to this one, let's quickly run through what we saw on the 4 hours time frame that caught our attention. So when we went to the 4 hours time frame, this is what we saw here after taking into consideration the trading activity in this market since the month of March. And when we did that, we can see that we are on a bullish momentum, and after connecting the series of higher lows, this further confirms the strength of the buyers in this market. And one thing we said here on Monday about this whole structure is that we might likely see a trend continuation to the upside, considering the fact that price is sitting on a very strong demand zone around the 133.500 area, which happens to be that level where the this bullish momentum that started at the beginning of the month, that was a platform upon which the bullish momentum that started at the beginning of the month is. Then another thing that we included into our structure at the beginning of the week was the key level sitting at the 135.00 area, and we saw how this level has been a major determinant of price action in the last 4 to 5 weeks in this market, giving us a clue into how strong that area is. So what we said this on Monday this week was that considering the consolidation phase we were noticing around that area, that a breakout of the 135 will welcome a buy position to the upside. But if price does not break out of the resistance line, then a breakdown of the support line is likely going to be bringing price back into the trend line. And remember what I said here. I said depending on how price action reacts to that trend line will now determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to join another wave of bullish momentum where price will respect that trend line one more time. And look at what has been happening here in the last 16 to 20 hours in this market. We saw that as soon as price action came into that trend line, we begin to see this old choppy situation, which looks more like a reversal pattern. And I shared this update this morning on my public platforms that we already have a reversal pattern formed along the trend line, and this was what we were able to spot here. So we had this whole structure figured out, and we had the neckline had the 134.400 area, which will be serving as a platform upon which a bullish momentum could begin. And for those who took advantage of this opportunity, well done to you for being on standby, as you will currently be running with about 37 pips in profit at this point. And my advice here is to move your stop loss accordingly to secure this current position. Now let's quickly run through the expectations of buying opportunities in this market before we look at the other side of what could actually happen. Now that we have a breakout of the neckline of this reversal pattern, actually, and there's still a chance that price could come back to retest the structure. So for those who had missed out on this opportunity, the market could still give us another chance to be part of this move, and that could likely come in the form of a retest of the 134.40 area, which happens to be the neckline and also shares a confluence with the bullish trend line that you can see here to incite the second wave of the bullish momentum. So let's look out for this opportunity at this point. Then another thing that could happen around this area is if price action breaks above the 135.850, then at this point price action will be back above that demand zone, which has been supporting buy pressure since the beginning of the week. So if that happens, that is, price action breaks out of the structure to the upside, then buy pressure around this area will definitely give us more opportunities to add more position to our existing trades. So this is what we are going to be looking out for to buy the USD JPY today. Now, there is one thing I would like to call our attention to based on this current structure, and especially for those who already have a buy position triggered at the breakout of the 134.400. Now, that is the fact that we have a key structure at the 135.850. Remember, this level was our demand zone at the beginning of the week here. Remember? And then we saw the breakdown of the structure during the New York session yesterday. And you all know that from a technical standpoint, that whenever price action breaks down of a key structure, there is a high chance that price action will come back, retest that structure to incite another wave of bearish momentum. So because of this technical expectation in mind, as soon as price action gets into the 135.850, we want to be moving our stop loss accordingly, lock in some profit of this buy position we have running at this point, and then let's wait out and see how price action will react to this level. Now it now depends on how price action reacts to the structure that will determine if we are going to be selling or adding more buy position to our existing trade. So if it so happens that price action gets into the structure and we begin to see sell pressure below this area on our lower time frame, then at this point we want to be getting ready to sell. A reversal pattern, breakdown, retest of structure, we are in on the sell position, and we will continue to ride the move all the way to the downside. But one thing about this area is that if price action continues to the downside, we want to be moving our stop loss accordingly to lock in the position. Now if it now gets into the 134.400 area, which also shares a confluence with that trend line, then at this point we ensure that our position is secured, and we want to see how price action will be reacting to this area to now decide if we are going to be adding more sell position, or this might be the retest of the neckline of the reversal pattern we identified here. So there are two things that could happen around this area. If the sell pressure began around that area, breakdown, retest, then we have a sell-off in this market, had more position to our existing trade below the 134.400, and if it so happens the buy pressure resumes above the structure on our lower time frame, then at this point we look out for more opportunities to buy the USD JPY. So at this point in time, let's remain patient. For those who have a buy position at right now, secure your position, and right now price action is around the 135.850, and it could take about an hour or two before we see a setup that will give us a confirmation of what is really going on around that area. So let's be on standby, and rest assured that I will be with you right in the comment section on both my TradingView and Telegram platform as we get prepared for the London and the New York session. So on this note, I want to be calling it a day here. It has been a wonderful moment, and I'm very sure and confident that we are well equipped to be able to take advantage of any trading opportunity during the live session, during the New York and the London session today. Do have a wonderful evening, and rest assured, if you're not in my Telegram and TradingView platform. The ID is scrolling at the bottom of your screen. You can join me there, and I will always be with you there as we continue to monitor price action. Do have a wonderful day, everyone. Bye bye.